Hi, good evening, everyone, and welcome to the 69th episode of Let's Talk About Market. If we see today, the Nifty index was pretty much dull. Because it was in weekly expiry, we saw, kind of a wild movement towards the, uh, later half. But, broadly, it was flat. I mean, if you see mid cap, small cap, everything was flat. And this is what something that we had spoken about yesterday as well, because daily swing was also towards the upper end of the range. Anyways, let me give you those evidence with the chart, and that's where actually the daily swing works like magic. So I would I think in this session I can also help you, I think, to understand how to deal with the weekly expiries as well, because today was one such great example where data was kind of telling us that 26,200 would be an important resistance point. So let me quickly share my screen, and please, if someone can, confirm if they are able to see my screen properly. Okay. Please, if someone can, comment in the chat box if they are able to see my screen and if they are able to hear me properly. Okay. Thanks, Deepak ji, for the confirmation. So, see, one thing was that, as you all know, today was the weekly expiry as well. Okay. And if you see Nifty index, it was almost dead, right? You can see this. It was almost dead. And basically, what we are seeing is a consolidation. After an up move, there is a bit of a consolidation that is happening. The good part is that, while one can argue that after a breakout, we did not see a follow up buying today, but nevertheless I would still view it positively. That is because after an up move there is a consolidation happening at a higher level. Now it is possible that, given that the early RMI is in sell, that Nifty index can test this or this level, and only after that it rises higher. I mean, that is entirely possible. But as long as I would believe that if the Nifty index is above the early averages, it is fine. Okay. Now, as I was telling you, where daily swing and all this data points on strike works like magic is, we had spoken about this yesterday, right? That the daily swing was around 86, 85 kind of levels. I think, to be very precise, the yesterday's close was 85. Today it was 86. If you see the chart over here, basically, see, 85, 86, and as we know from the past as well, that if at all such high readings come, then at least in the next few days or few trading session, it can end up getting sideways. Okay. And this is what, this was one such day that we have seen this. The other thing is that if you see the options data, okay, and let me just show you what had happened yesterday. Okay, this is today's data. If I go and if I do as on 22nd, okay, it tells me what is the data for 23rd expiry. Okay, this, if I do the combined OI, that I get to see that 26,200 is an uh, important resistance level over here, right? 26,200 over here, as you can see, is an important resistance level, because that is where the meaningful open interest is. And in fact, at 26,000 as well, there was a meaningful open interest. Okay. Now, fast forward today, if you see, okay, you can see that, say, this was the first star. Okay. This was the first star. So you can simply drag over here and get to know what is the open interest and OI change as well. And you can see that in the first star itself, it was kind of clear that possibly 26,200 will act as an important resistance, and 26,150 and 26,100 will act as a good level on the downside. And since there was some call and put writing both happening here, so maybe this could have been an area to watch out for. Also, if you see, the max pain was also around 26,200 levels. So, and if you see during the day, okay, there was a bit of an unwinding as well of the call options, at least around the midpoint. But see, you see over here that till 120 or so, continuous call built up and all was happening. and after that it became sort of more evident that 26 150 and 26 100 put options were getting written, and 26 200 and 26 250 were written on the upside. Calls were written on the upside. So there was a time in between where a meaningful put shorting had happened, when we got a spike above the 26 200 levels. But still, the open interest of 26 200 was so high that I was thinking that maybe this is not going to get breached. That is also one reason why I was thinking that, was because the swing was around the 20 around the 85 86 kind of level, right? So from there I was not expecting much of an up move, and one more factor was that bank nifty was not participating. Bank nifty was also more or less very much flat, right? So that is what was making me think that maybe 26 200 will hold out. Eventually we when it started correcting, and after that, after 3 o'clock, we saw an aggressive call selling as well, and then it ended up eventually closing around 26 200 sort of levels. So my main point is that when you are into the weekly expiry, and especially if swings are at an extreme at any point, either up or down, you have to be careful of that moves. So basically, Nifty was trending higher for the past couple of trading sessions. In fact, in last 3 days, Nifty had rallied almost around 500 550 points, right? So when that is the case, swing is towards the upper end. And also one more factor was that if you see the call minus put, that had come to negative. Okay, so whenever you see call minus put coming to the negative, I mean, there is usually a consolidation or a correction that ends up happening, right? You see this over here, you see this over here. I mean, even over here, if you see the bars, it has gone into the consolidation mode next day, right? So doesn't it look like a very familiar pattern, right? So if you see over here, okay, this was the day where call minus put went into negative. After 2 3 days, it saw a correction. Okay, over here, call minus put went to this red line. Okay, and next 2 3 days, 4 days, we saw a correction. Something very similar is happening over here. Now, at this point of time, the only thing that I am anticipating right now is that maybe there might be a pullback towards these averages, okay, because the daily swing is high. I'm not expecting beyond that. If the hourly averages breaks on the upside, then maybe the risk of some correction, some deeper correction can happen. And I'm again and again pointing out to you to watch for VIX. Okay, if the 40-hour breaks on the downside and the India VIX rises, then there is a little bit of problem, okay, that we have in the near term. But I mean, as I told you, I mean, this is not something frankly that I'm expecting right now. uh, so because see, there are a couple of factors. If you ask me why I'm not expecting that, that is because if you see the breadth, that has started to improve in the past 2 to 3 days. Okay, in fact, so for today, if you see, there are 1842 advances and 1326 decline. So even today, while the market was sideways and not many things have done, I mean, it was more or less flat, but the breadth overall was good. Okay, so you can see from lower levels, it is now trying to catch up. So at the max, what I would expect is some bit of consolidation over here. Okay, and in that consolidation, I would expect that Nifty should not ideally break below the 40-hour. And if that does not happen, then this will just be a healthy pullback, and then there will be an up move, that should be followed. That is what I am guessing right now. But if the 40-hour breaks on the upside, so then I'll watch very closely what the VIX is doing. Is it going about 10? What is happening? That is where I'll be careful. So that is what I have in my mind right now. And as I have told you earlier, okay, from a medium term perspective, so from medium term, I mean, say 3 months, 4 months down the line, I don't think I have doubt on that, that probably we'll be heading towards 28 29,000 kind of levels, eventually, because of the positioning that because of the FII's positioning and all the data points that are suggesting us that there is pessimism. I mean, you take it, FII's positioning, you take it breadth, uh, you take any data points. I mean, this OI call minus put is now come down towards the lower end. So you pick any data. If you see FI's long percentage, it is 11%. Okay, and the only sad part is that this time it is holding. It is holding on towards lower level for a very very long time. Usually, whenever it used to come to an extreme, we used to see the move on the other extreme. So let us see. I mean, to this week, the coming week, there will be expiry. So how much are they holding their short positions, or how much they are covering? Those are all things that will be very clear to us. So the only thing that I told you that I am not sure of is that whether we have done the bottom over here, or is there a bit more panic that is left in the market and then we are rising higher. I am open to this possibility, mainly because of India VIX, which is at the lower level. So I'm I'm just giving you those thoughts because uh, today we did not see a fall off buying. Okay, I mean, after Nifty turning bullish, we just today saw sideways consolidation. And if you see VIX, okay, this is the line chart that I have done. I mean, you see it for past, even if you want to see a weekly chart. Okay, so since 2011, this is the lowest level that is ever there. Okay, now is this because of the festive season that is going on and there is lack of participation, or is this complacency? I frankly don't know, and that's where I'll have to rely somewhere on the chart patterns as well. Okay, to so so simply put, as long as the 40 hour does not break on the downside, it will be all okay and not so worrisome. So in fact, forget about 40 hour. Even 40 hour, if it breaks, there is this gap zone that I've drawn, right? This gap zone will be an important support. So only if 26,000 breaks on the downside, okay, then that's where some bit of concerns will start propping up, that whether this was a trap or something like that. And I will be a lot more confident in telling that now it's the time to go aggressively long when we decisively have a weekly closing about 26,300, because this is what we are lacking. Every time it breaks above that, but end of the day the weekly closing is never above that point. So that is where sort of we are struggling right now. So it's like I'm frankly on the edge. There is definitely some bit of bullish positioning that is already there. And in fact, even in the past 2 3 days, we have we did put out a few bullish calls as well, in the anticipation that the up move should happen. So yeah, I mean, that is how we are placed. I think once 26,300 gets decisively broken, that's where we'll start being very aggressive. But until then, there is a case for some bit of consolidation in the near term. And more importantly, we need to watch, if at all this RMI is pointing out towards a bearish crossover, then in this pullback, whatever we see, do the averages hold or no? Okay, if it ends up holding, then it will be a very good sign. So that's how we are seeing. And as I had mentioned you all yesterday, right? I mean, some or the other sectors will come for an rescue. Like if you see Bank Nifty, it was extremely flat. If you see Nifty ID, it was down 0.8%. Yesterday, that was the one that supported market. Today it was down. But today, FMCG, I had spoken about that, right? From lower end, it is trying to bounce back. So that has bounced back. Nifty Metal continues to rise higher, after this breakout and a small consolidation. Uh, then I think PSU was the one that has come up. In fact, PSU Bank is sort of disappointing, because if 20-day was broken on the upside, it should have seen good follow through on the upside, which is not happening. So I mean, it's a very mixed market right now. probably, just need to take it one day at a time and see. I mean, if at all you end up getting those decisive breaks or no. I would still be hopeful that at some point of time PSU picks up. That is because it is having this nice setup: up move, pullback, and up move. And in this pullback, it goes back to the zero line, and then again it rises higher. So there are such nice moves that are happening in many stocks. I mean, some of them we spoken about it yesterday as well. So yeah, I mean, broadly that is how I'm thinking at this point of time. Maybe in the next 1 or 2 days we get some consolidation, because the swing is at a very high level. Okay, maybe if we get one more sideways days of consolidation, because average swing takes the average, so it sometimes comes in an overbought zone with a lag, with swing. So if we have both of them towards the overbought zone, then maybe in the near term for the next 3-4 days or so we end up getting some sideways consolidation. So that is the only risk that I see, at least in the near term. If 26,000, which was this gap area, right, if this gap area breaks on the downside, then there is a worry in the near term. Else, if it pull backs and then goes up, I mean, I won't be surprised with that sort of move. So yeah, broadly that is how I'm thinking. The monitorable points in the coming days and the coming weeks is that Nifty index, I want to see how the monthly closing would be. Okay, because so far, as I told you, monthly closing is in red, because the prior close was 26,202. Okay, so it needs a monthly close about 26,202 to give us a bullish crossover confirmation. I mean, there will be a bullish crossover as well, and there will be this confirmation that we don't have a swing top, at least, because if at all there is a red candle, then that high ends up becoming an important resistance level in the near term. So this is one watching point. The second watching point, as I told you, is the FI's positioning. In the last 2 days, if you'll notice, they have started to cover a bit. They went to as low as 165, 1,65,000 contract in this current shorting. And in this past 2 days, they have, cut around 20,000 contracts. Okay. So whether this trend continues or no, and if this trend continues, then ideally that should be supportive for the market. So that's there. This extreme short term pattern is where I'm a little skeptical. I mean, whether we get a runaway rally immediately, but I would expect that if there is a nice consolidation that happens from here, and this also data then starts to go higher, which is the call minus put. uh, because see, over here you can see that whenever the call minus put has come to red, it has resulted in some short term correction or consolidation happening within next 2 to 3 days or 4 days. You can see over here, right, next 4 days consolidation. Over here it was the highest, then in next 4 or 5 days it went down. Okay, again over here similar thing. So this, I have seen this pattern repeatedly time and again in the past few months. So that is where I think that a bit of a consolidation can happen, but those consolidations should not be alarming. It would only become alarming if 26,000 breaks on the downside, right? So that's it. I mean, that's what I have for today. And do try and use this swing indicator, especially if you're a short term trader or if you want to predict the short term moves, because it works very well. I mean, in the past few sessions, I've started I have started to see daily swing along with open interest and so on, and especially into the weekly expiries. It has a good uh, way to interpret. Basically, when I try and combine hourly RMI, daily swing, where is it, where is the open interest, you get a fair idea of what is likely to happen in the coming, I mean, on the expiry day. So yeah, I mean, that's it for today. I think there are many questions. Okay, there is a question on FMCG sector. So I had mentioned this, that FMCG, if you see, is trading sideways, right? And it had come back towards the lower end of the range. So there is an expectation that it will now try to bounce back from that. So yeah, I mean, that is how I'm thinking at this point. More momentum will pick up once the weekly averages are broken on the upside, and we end up getting a bullish crossover. Okay, all this, I mean, each time I was expecting a turnaround in FMCG, it has again come down. So that is the disclaimer. But broadly, if I see the long term structure, I mean, I am it looks good, especially on the index level, because if you see the monthly index, okay, it had touched the 40-month average, gone up, now consolidating. I think 1 month of positive move in the FMCG index, it will get the RMI in a bullish zone, and that would mean that the next leg of up move can possibly start. So, and anyways, many people are skeptical about FMCG, so that uh, adds to why probably it has legs to move on the upside. And in fact, on a broader time frame, this is also kind of an inverse HNS pattern which is developing. But it has been developing for ages now, it feels like. I mean, and it is not breaking out. So I'm hopeful that at some point of time this will break out. Let's see. Let's see. But at least in the near term, the FMCG is towards the lower end. I mean, I have been trying to highlight this in the last 3-4 sessions as well. So yeah, I mean, that's how I'm thinking of FMCG index. How can investor identify value stocks in the market? So at this point of time, see, we don't have scanners, but you can broadly think of the stocks that have not done well, right? Like say Coal India. Coal India, you go to fundamentals, you go to valuations. I mean, there are many of them, which are there, frankly. If you see EV by EBITDA of Coal India, okay, you make it max, and you will know that it is trading at an EV EBITDA of 4. Okay, and if you see it with this entire what do we say, its history, you will come to know that it is almost towards the lower end of the range, right? Then there are many other businesses. The only thing is that over here right now, since we don't have the scanner, you might have to go it one by one. I mean, I am telling you some names which I have on my mind because I have been tracking for this for quite some time. If you see Samvardhana Motherson, okay, you track this by EV to EBITDA. Over there as well, you see I mean, you see it towards the bottom end of the range if you do max, right? You see over here. So there are enough value that is there in the market. The only thing is that you need to do some hard work and try and find those stocks. For that, you have to, if you want to find laggards, search for the stocks which have not performed. Okay, if you see LIC housing, even that has not done well, right? Now the only problem with the value stock is that when they will turn around, how they will turn around, uh, that is the bigger question. Okay, but if you see LIC housing has a 2% dividend yield, if you go to fundamentals, you go and check its price to book, it is towards the lower end of the range, right? You can see over here 0.81. Now when this will turn around, I don't know, but this is what it is. I mean, there is frankly enough value that is there. You just need to dig deeper and see the data. That is what I can say. How does peer comparison work when evaluating stock, and how it is applied in practice using strike? So peer comparison, see, if I have something on my mind, say for example banks, right? Let me take example of bank, that HDFC bank. I mean, over here, the whole idea is that you try to get to see all the matrix. I mean, if you want to see it from a technical perspective, you get that view. Okay, whether you want to see daily, weekly, hourly. So for that, say for example, you want to invest, right? Then you can see over here on the weekly time frame, IDBI is turning down to up. Okay, rest of them on the weekly chart are on the upside. So then you will see the fundamentals of that. So in fundamentals, you might evaluate them on different aspects. Star Indocent, this is hyphen because they have made losses recently, but otherwise you can see over here. You can also sort it, and you can see which are low P. So IDBI, Access, there the P is low. Then you can see price to book. So basically, whatever you want to see, you have all those data all at your fingertips. If you want to see operating matrix, okay, in operating matrix, this is also very interesting, frankly. So there are different matrix like interest income per employee, PAT per employee. So whatever is the higher PAT is basically the ones they are more efficient, right? So you can then try and evaluate them on different parameters, like you see over here. Okay, uh, in this case, if you see, actually Federal Bank is the highest based on the interest income. Then PAT per employee, IDBI is highest. So you can get those perspective looking at the data. So of course, all this helps you to evaluate quickly. Then, I mean, the decision is up to you, because ultimately valuation matters, right? I mean, forget about all this. Valuation matters. This All this data point will tell you that why the valuations are rich or why it is cheap, because there will be some problem over here. The only thing is that you need to understand is that, are those solvable? Can they work on it? Can it see a turnaround in those parameters? If the answer is yes for them, then even for the cheap valuation, it can end up it can end up having a good outcome if things starts turning around. So that is how you can use fundamentals. So there are three aspects, right, which we typically want to evaluate the stock on. It is either technical, fundamental, or price performance. In price performance, it tells you that how they have behaved in 10 1 year, 2 year, 6 months, and so on. So you can just try and filter out based on that as well. Now over here I can see that Indocin is the only one that is giving negative in 1, 2, 3, 4, 5. So I'll be very curious what is happening over there. Can it be a turnaround story? Do I want to venture into that? Or I'll try to find which is the best performing. So I'll see that in 1 year, IDFC first and Federal is the one that are outperforming. Okay, I mean the top three are this. So then based on your time frame, you might want to do price performance ka peer comparison and try to find where is it that good opportunity lies. So basically it is based on the three things that you might want to analyze and see what fits the bill, what suits you. Kushwan says, I think in 2 to 4 days, Nifty comes to 25,890. After that, so let's see. I mean, I've tried to explain you through the data what can possibly happen. Let's see how it unfolds. If Sorry, just give me a minute. Let me just mute this. Okay. Um, Dinesh says, if VIX is at its low, should I not take it as a bullish trade? Yes, so you can take it as bullish, but the other word for bullish can also be complacency, right? And so that is what I'm saying. See, I don't know. Historically, so I'll tell you why VIX is bothering me. Okay, over here also I had thought that Nifty might do very well. Okay, because there was a nice pullback, and from there the turnaround was happening from an important point, like you see over here, right? The turnaround was happening for an important point. and I did not feel that there will be a correction over here. Okay, frankly, I thought that it will rise higher, but now you note the dates. Okay, and this is my primary fear, to be very frank. This is 17th 18th September. Now you see the VIX, what was it at those September levels? See this, 17 18 September, right? That is the date I told you. Wait, let me just once again confirm. 18 September, इंडिया विक्स का लो वाज 19 सितंबर एंड वहां से विक्स रोज हायर फ्रॉम 9.4 to 11.9, and in that time frame, in the next 4 to 5 days, we ended up correcting all the way from 25,500 to 24,500. Okay, there was a 1,000 point decline. Now I am not saying that there will be a 1,000 point decline, so I am just trying to go by the levels. Okay, for me 26,000 is like a very very important level on the downside, where below that I will not give the benefit of doubt to the bulls. I'll probably turn neutral. See, at this point of time also, if at all, okay, if at all the Nifty index breaks higher and then it starts sustaining above this, then I wouldn't give much importance to India VIX being lower, because then I will feel that yes, there is a bullish move that is on, and that is why the India VIX is also low. Probably people are more confident. But given that this range is not broken on the upside, nor we have demonstrated that we have strength so far, the only thing that I can tell you right now is that नीचे में लोअर लो बन रहा है, राइट, बट ऊपर में हाई बनते सेलिंग भी आ रहा है, राइट. सो समवेयर वी आर स्टक इन दैट रेंज. सो I am not sure that, given that we are stuck in this range and we are now approaching towards the upper end of the range, so is there a risk of Nifty index correcting towards the lower end of the range? That is the only thing that I am trying to think of or letting you know. I mean, at this point of time, if you ask me what is the bias, I would say the bias is bullish. That is purely because it is trading above the hourly averages. Okay, the moment it breaks below the hourly averages, my confidence level will go down a bit. And if 26,000 breaks on the downside, then I'll start worrying that do we end up seeing a correction towards 26,700 or so. I mean, that is how I am thinking. I might be wrong. And the other thing that is also kind of bothering me is that the daily swing is towards the 80-90 levels, and when we end up seeing that, it typically translates into sideways correction, but sometimes it can also result into a correction that we saw over here. So whether it will be a sideways correction or a meaningful correction, I don't know. But at this point of time, I can say that risk reward is not in my favor. Maybe if this cools down a bit and then it sees a minor consolidation and after that it breaks, then I will know that this is my pivot point below which the prices should not go. Okay, so in that sense, then over here the risk reward will be in my favor. But over here, if I have to think of an up move, then I don't have any levels to work with on the downside, right? My downside will become 500 points lower, and I know that immediately within 100 150 point there is a resistance. So I'll probably try to be a little more patient and see how things unfold in next 2 to 3 days. If it is a sideways consolidation, it will be a good outcome, I think, for the coming days. So that's how frankly I'm trying to think at this point of time. Thanks, Rishi. Okay, sorry about that, Sarthak. I don't know what would be the reason. Please explain why PCR and volume PCR. So simply put, the open interest of call divided by open interest of, the open interest of put divided by open interest of call becomes your OIPCR, and volume PCR becomes volume of put and volume of call. So just to quickly explain you, in OIPCR, rising OIPCR is associated with bullish markets and falling OIPCR is associated with bearish market. Okay. In volume PCR, it is the other way around. I mean, when when the prices are going down, the volumes of put will rise, correct? And that's where there is a chance of a market bottom happening if it turns to the extreme. And when the prices are largely moving higher, the volume PCR will keep coming down. And when so volume PCR is more of a medium to long term indicator. But when this volume PCR comes to around 40 zero point 0.4 or so, that's where you can say that there is absolute complacency in the market, and you have to be careful of a correction. Okay, this was last seen in 2021. After that, in this entire rise, there has been skepticism only. This is one of the reason why I feel that the top is not made, frankly, because for a top you need extreme complacency in the market, not skepticism. And if you see volume PCR, it is actually showing skepticism and not so much of a bullishness. I mean, that is what all the data points are telling me for that matter. I mean, be it FII data, be it breadth is also towards lower end. The medium term breadth is also towards lower end. I mean, you pick and choose any data point, most of them are pointing towards skepticism or fear only. So, yeah, I mean, that is how it is. Can I use strike feature to identify stocks still not in oversold, not RSI, but for stocks which are trending higher? Like, so you have to decide, Deepak, for what. I mean, what do you mean by oversold or overbought if you're not saying RSI then? Uh, but I frankly did not understand your question. I mean, how to identify that the stock still not in overbought, oversold? Probably valuation will be the only thing that can help you to understand whether it's in overbought or oversold zone or not. So, uh, M&M Auto Stock is having a good setup. Yes, actually, just as a disclosure, we had given this call today. I mean, you are perfectly right that M&M has a good setup. I mean, it has bounced back, it has pulled back to the averages. I mean, it has pulled back and now it is trying to turn around. And more or less, if you see the weekly chart, it has been trending pretty well. And from the 20-week, it is trying to turn around. So, yes, the setup does look good, and there is a nice crossover that we are seeing as well. So, hopefully, it should do well. Strike is a powerful tool that helps you. Thank you so much for all your support. Please do spread across your word, spread across the word to your network as well. This will help us grow and probably help us add more features as well for y'all. Uh, so once again, thanks a lot for your support. The daily swing at its high, it tried to break above but could not sustain. Yes, you're right. How to use ratio charts in strike? So you are just trying to find a ratio. Okay, so see, I'll tell you. Ratio chart, when is it helpful? It is helpful for the stocks which are underperforming. Okay, and are they worth for a turnaround or no? So, say for example, TCS was like a big underperformer, right? So, if you see the ratio chart of TCS to Nifty 50, it had almost come back to, I think, 2017 levels or so. Yeah, I mean, uh, wait, uh, sorry, I think there is. But I think there is some issue that has happened. I'll need to see. Mm, Give me a minute. Huh? Yeah, there was some issue earlier. But see, what ratio charts helps you to do is that, see, when the ratio is going down, that means your numerator is underperforming, which means that in this case TCS is underperforming. And when your numerator, I mean when the ratio chart is rising, that means the numerator is doing very well. Okay, now TCS was one such example where it was a laggard, right? And you can see that in the past also, when this was the phase, right, 2017-18, from there we can see that Nifty was lackluster, but Nifty index, I mean TCS did very well, and ratio was at a lowest. I mean, if you see it from that perspective. So let me just draw the line. So in the past, you will see that whenever it would be coming to this line, it will be an indication to probably buy TCS from a medium to long term perspective, right? I mean, prior to 2013, it was a very different game where it used to sustain at a lower level. But then after this, you can see that in 2017, that was the bottom it formed. Now it is again trying to turn around from that. So this is very helpful for the companies where it's a laggard. Say, for example, ITC, right? In 2020, it was a big time laggard, correct? And if you see that ratio, that had gone down so much. I mean, if I draw those vertical, horizontal line, horizontal line, and you will see in the past that those sort of levels had come somewhere in 2008. Okay, and after that we saw a sustained rally. So this similar thing happened over here in 2021 because Nifty was rising higher, stock was not rising higher. Now again, what has happened is that, after this up move, this consolidation has happened. So ratio chart, you can use it different ways. I mean, some people also try to trade when there is a breakout from this ratio and so on. More importantly, I try to see where are they from the historical perspective. Frankly, ONGC is also one forgotten stock. But if you see the ratio chart, I mean, it looks very appealing because the ratio is still very, very much on the downside, compared to what used to happen earlier. I mean, you see the kind of outperformance ONGC used to do earlier, but now that is not the case, right? I mean, the current value is just languishing over here. So can this turnaround happen? Yes. When will it happen? I don't know. So the way I think about ratio charts is that when certain important level breaks, and on the ratio chart it still indicates that it is very undervalued, I mean that it has underperformed a lot, then it would be a signal for me to probably increase the allocation, or this is where the outperformance can lie, because you can see that in the past it has also done this kind of outperformance, right? So if at all it ends up breaking out and the ratio is still over here, it still tells me that the margin of safety is pretty high compared to what we have seen in the past. So yeah, I think that's how I look at ratio charts. There might be different people looking at it differently, uh, but yeah, I hope that answers your query. So so yeah, I think it's 5:43 now. I think we have done a good 40-minute session. So yeah, that's it from my side. Let's catch up tomorrow. And again, I mean, as I told you, we need a decisive breakout about 26,300. Okay, to see a runaway rally in the near term, because swing is at the higher level. There is a possibility of some bit of consolidation or correction in the near term. But in that correction or consolidation, ideally 26,000 should not break, because I told you that is the gap area, right? That should not break. If that breaks, then there is a problem in the market. Else, whatever pullback happens, probably till 26,000, it should be viewed positively. So that's what I'm thinking at this point. Let's evaluate tomorrow if there are any change in thoughts, and let's evaluate if there are any other important trends that are visible now. Okay, So once again, thanks a lot, and let's catch up tomorrow at 5 p.m.